All right, wonderful. Well, welcome everyone. My name is Karen Houghton, and I'm the CEO and co-founder of Infinite Giving. We're a financial technology and investment advisory firm that modernizes how nonprofits raise, invest, and steward their money. We serve hundreds of nonprofit organizations all over the US, and we're glad that you decided to join us today. So today's conversation is titled Finance is Leadership. And we're really passionate about that because we know that in healthy nonprofit organizations, financial execution should be delegated. We've got CFOs, we've got controllers, accountants, auditors. These roles all exist for a reason. And many of you on this webinar are the professionals carrying that responsibility every day. But what we often see is not a failure of that delegation, but a gap in leadership engagement on the financial side. We were actually just talking about this informally even before we went live. This technical work's happening. The reports are being produced. The audits are being completed. But sometimes we struggle when financial information stays siloed as a back office function rather than being actively integrated into that leadership decision making. As we all know, nonprofits rarely get into trouble because they don't care about their mission. That's what you guys are so good at. We get into trouble when leadership isn't always fully engaged or informed with the financial implications of that mission, how cash flow, risk, timing, and trade-offs shape what's actually possible. So financial clarity, not about turning nonprofit executives into accountants. We've got two of them with us here today. It's about ensuring that leadership understands that financial story well enough to help them ask the right questions, make informed trade-offs, and really, ultimately, altogether, we're stewarding the organization as responsibility as we can. So that's the lens for today's conversation. I'm joined by two people who sit right at that intersection of technical finance and leadership every day. I'm going to start with you, Sam. Sam Coates. He's a partner at CFO Leverage, and he works closely with executive teams on those strategic, forward-looking finance. Welcome, Sam. Is there anything you'd like to add about your background?
No, just happy to be here and happy to be connected to Infinite Giving. And I am a partner in CFO Leverage, but I'm not a CPA or CFO. But this is my third service business since we've been building and growing this company across the country. But a lot of the accounting piece is important, but we're also in the people business, and then processes, expertise, working on all the things that have to get done. So it's been a privilege to be partnered with Daniel, who has a deep background as a CPA and an auditor. But I'm mostly on the client side and meeting them, understanding them, and helping us make sure that we deliver. But just fired up to be here and hope we can be of value.
I love that. Thank you. And then Daniel Weaver, as Sam just mentioned, he is a CPA. He's a virtual CFO at CFO Leverage. That's that accounting integrity, audit facilitation, financial systems for nonprofit orgs. Welcome, Daniel.
Thanks so much for having us. Looking forward to the conversation.
Absolutely. All right. So the idea, even though this is accounting, guys, we want it to be practical. We want it to be candid, not overly technical. Although Daniel, if you want to go there, feel free to. But we really, I think all three of us bring that lens where let's be in reality, what all of us see every day. And we can start with that leadership side of the equation. So before we jump into the questions, just remember for everybody listening and watching, we have a Q&A below. So remember to drop those questions that you have, and we'll get to them in real time if we can. If not, then we'll try to catch them at the end as well. But any questions you guys have, let us know, and we're happy to discuss. All right, let's kick it off. Sam, in your experience, what does strong financial leadership actually look like for a CEO or executive director? Like beyond reviewing reports once a month, what's their role there?
Yeah, I think, well, over the last few days, I've been traveling, seeing clients in the South, and specifically, I'm thinking about the conversations. So obviously, somebody most often they're running a nonprofit. Their heart,
Yeah.
their personal wiring, they are locked in on doing the work that the organization serves the people on the front line day in, day out. And so, people's understanding and knowledge of financial statements or budgeting or systems and processes that's all those things are extremely important, but it's not probably what they studied, when they're coming up and on the career path that they're on. So specifically, I think issues that I'm seeing, and I think the opposite of this would be what strong leadership looks like. People obviously they're going to want a tight close process. They're going to want tight reports that they can review on a monthly basis. The board's going to want to get the information in sufficient time to review the materials at the board meeting. So that's a reflection to the director on, are they getting the information to the board? They're going to want to not just they're going to want to own the financial story of the organization. So they're going to want to be able to ask questions. They're going to want to understand how the work that they're doing and how the finances support that, so they can tell that story to donors, but also for grant applications and things like that. And so what I'm seeing right now, depending on the size of the organization, sometimes people that have been legacy staff or been there for a long time, they've really had a hard time adjusting to maybe the growth or the momentum of the organization. So then maybe the director is feeling like they're having to do more, try to wing more of the strategic piece. So I think there's gaps, and every organization is different, but especially at the organizations, that are 10 million and under, where it's hard for them to have a full kind of arsenal of accounting staff. They really want expertise. They want insights. Last year was a hard year from a funding standpoint for a lot of organizations, but they need that knowledge and they need to understand the numbers and have somebody that they could really ask those questions to dial in the audit process, to really understand where their budget is, to be able to have the insight to make decisions when things change fast. So that's what I'm seeing and hearing from our clients. And I think ultimately what they want, whether it's people in-house or like a partner like us, they want people that are going to own those responsibilities, bring new ideas to the table on how to do the AP system or how to integrate this donor software better. And so you've really got to have, I think, the expertise in this space to, I think, give leadership the information that they want and need to continue to drive the organization with as much efficiency as possible.
And sometimes what information do they want? Right? Like sometimes if we take that and even step back further, clear reporting, I have to say on the investment advisory side at Infinite Giving, it's often like traditional advisors will do the big annual dog and pony show and they do this whole big stack of paper. And the nonprofit leaders are like, no one reads that. We don't understand half of what it means. So when we provide that, we have all of the analysis, but the reality is we try to give bite-size, plain language information where we can say, great, here's how we're stewarding your money, here's how it's performing, here's what we recommend. So it's in a way that everyone can understand. And then all the details are like in the appendix. So it's there if you want it, but the reality is let's talk about it in a way where we can all be aligned and understand. Sam, for you, like when you're working with these leaders, how do they even find out what's the best information to put in front? 'Cause sometimes you can put too much information in front of people, and sometimes you can put not enough.
Yeah, well, I need to kick it to Daniel here, and I'll
Yeah.
explain. So
What do
I
you
talk
think,
to the
Daniel?
clients when we
Mhm.
get them going, but then once they're in the system, I only talk to them to make sure they're happy and then to help solve problems, along the way. But Daniel really knows in and out better than I do.
Yeah, Daniel, I think I was kind of asking, how do these nonprofit leaders know exactly the best information to put in front of all these key stakeholders? Because sometimes if you put too much, they get lost in the weeds, they're missing the big picture. And as Sam was saying, we have to story tell it and we have to story tell it in a way that makes sense. Is there a best practices list or something that you usually recommend of like, here's the basics of what they should be reviewing?
I think there's a couple different ways I could go with that question, but a lot of times boards have developed over time sort of some charts or graphs or key, you know, items that they look at that kind of match their mission and goals. And there's I always like to do incremental improvement and not just set it and forget it, but continue to look at ways to improve, what folks are looking at. One of the kind of trends that or themes that you'll hear in my responses today was I think it's important to recognize that there's a difference between cash in the bank and profitability for whether you're whether your model is working. And so I'm going to keep coming back to that theme. We don't have to explore all of that on this question, but I think just understanding both is important. When you're looking at the financial numbers to see both, like, do we have the cash and the cash reserves and to support our mission, and then also is our model profitable, and not profitable in the sense of uh, you know making money for shareholders like a for-profit company, but profitable in the sense of, like, is this a business case that is working? Are we getting the impact from the the resources that donors are trusting to us?
Yes. I love that call out because it's sustainability requires some profit, right? But then it's a nonprofit. I'm like, that's a tax exempt status. So really just giving ourselves permission as financial leaders to say, maybe scarcity mindset is not the most noble positioning, particularly when we're talking about finance. Like, how do we move from scarcity to a strategy that leads us to sustainability, which is essentially what you're saying, Daniel, of like, how do we get to that sustainable model? And it's not always just what's in the bank. And I think when we talk about storytelling there, I know one of the recommendations we make a lot is that when you have a reserve fund, it's not just like, hey, on the balance sheet, we're sitting on $500,000. That's one way to tell the story and it's factual, but then all your key stakeholders are like, well, what, why? Or you could say, hey, we are a $1.2 million, or $1.1 million organization, and this is a 5 month emergency reserve fund. Like, these are our operational reserve fund. And then you define it that way. And all of a sudden, instead of just sitting on excess, you're like, no, this is good stewardship. We're defining why these funds are here. And that's the story you're telling. So when you're looking at the balance sheet, it's not like, hey, we've got $500,000. It's, hey, we've built up an emergency reserve fund that has five out of the goal of our 6 months of reserves for best practices. So a lot of that is that storytelling. So, what does disengagement look like in practice, you guys? Like, I know so much of it is we are all tired. Everyone's got a lot going on. When we're looking at finances, there's missed opportunities or delayed decisions or risk or lack of, seizing opportunities. What do you guys see? How does that look like and how do we avoid it?
Yeah, so I'll say something quick and then probably move. But you're talking about like disengagement, or maybe would you say apathy? Is that what you're saying?
Yes.
Almost.
We all care, but like when there's so many different things, sometimes finances aren't always getting the best of us, right? For all the key stakeholders, which is where that disengagement comes. Like, do we have the balance sheet? Do we got a budget? Great. But what about the storytelling? What about the strategy?
Yeah, I'll say one thing real quick that I've seen is there are people I think that are good at like executing the tactics and the basics, but like recently I was in a meeting with a director and they were just saying like also want to make sure within our organization, in this case we serve them, and so you're working with existing staff, but we don't want to just keep making the same issue over and over again with with the payable process, or with such other process. Like there's a benefit to the organization, like to leverage software, to make sure it's tied together well, to make sure it's working together, or sometimes to make that conversion. Like we see this a lot. QuickBooks Online, for people that use QuickBooks Desktop, there's a lot of different softwares, but to kind of just get it done. And we serve clients in doing that. But some people, they get uncomfortable, maybe staff that have been there, about change, but everything's changing. And so I think we've tried to balance doing the work and meeting the responsibilities where they are, but there's also a lot of tools out there to make things better. So I think people can be so overwhelmed by the work, they can be overwhelmed by turnover, they can be overwhelmed by the pain of what they see doing the work, that sometimes I think they kick the can down the road on
Mhm.
maybe some of the harder decisions, but where you can really start to kind of get some leverage and some margin back on trying to really go after the root cause of whatever it is. And I think a lot of times people just, they kind of do it because it's always been done that way. That's more psychological, but you hear that coming out. Daniel, is there anything on that you see maybe where you kind of see this play out from a technical standpoint?
I mean, I think from sometimes the disengagement starts sort of as a what auditors call like tone at the top, just like at the board level, like having engaged board members that care about not only care about the organization, but show up and are promoting um, the organization, are financially giving to the organization, or, giving their time or their funds. And making sure that they're providing the proper oversight. And I think that then that culture trickles down to you know, to the actual practices of the organization. Are you just continuing to use software you've always used because, it's hard to change? Or are you actively looking at, those things and making sure that you have the systems in place and the processes in place to give timely reports and accurate reports? Um, and so there is a technical aspect of things, but I think on the whether somebody's engaged or not, I think it really starts with that board level and then the executive level and trickles down from there.
Absolutely. And speaking of software, Richard actually just asked us, he said he recently heard about Realm. Realm Financial looks like a financial software. Do you guys have any recommended software programs that you like to use? Or have you heard of Realm?
Um, I I don't think that any of our clients are using Realm. There's with in the technology world, stuff changes really really quickly, and so there's always uh, software you can evaluate and see what's useful or not. I think a lot of our clients are using QuickBooks Online. It's the sort of the gorilla in the room, so to speak. And there's pros and cons to that. It's not a perfect software by any stretch, but it's the most common, I would say, in the U.S. for small or medium-sized organizations.
Yeah.
Sage is another. You want to talk about Sage, any?
Yeah, then when you go when you when organizations are growing and you need some more sophistication, then you start looking at Blackbaud or Sage or like Sage Intacct or NetSuite. There are some softwares that are sort of the next step up from QuickBooks Online, but the it depends on what kind of reporting you need. And you know I think sometimes people default to thinking a new software or technology is going to solve a problem when actually it's a software problem or a process problem. And so you need to look at the end result and see what the goal is, where you're trying to get to, and then find tools that help you get to that result efficiently.
And then, sorry, just to try to share as much as we can here. Bill.com, that's a common process that we see across the board. I don't know if you want to share on that. And then there's other processes like Ramp. Uh, Karen, you want us to dig in on any of those, or you want to
I think even
bypass
just name
Jules?
dropping since he asked, I'm like it's sometimes it's those common software questions about that. And I know like Infinite Giving, we integrate with QuickBooks. There's a lot of other accounting software as well that you can integrate with. So I think it's just finding what works best for you, but it sounds like there's a lot of through lines for what's most common as well.
Yeah, and one thing I'll say here, we've seen in the past where people will spend a lot of money on some new software, and and then they don't fully implement it or use it. And that's rare, not the norm, but still, like I think that goes back to sometimes different new people come in and they love the software, but I think really trying to, because everything takes energy to change. So why are we doing this? And really trying to be thoughtful. Like when we try to move clients to a new software program, like at least the meeting that I've been in on, really trying to understand what their needs are and why they want to do what they need to do. And then trying to be precise with that decision from that standpoint versus just spend a bunch of money on something and doing something thinking it's going to solve all the problems. Daniel, is there anything else with Bill.com or Ramp or anything like that that's important to share?
I mean, one of the reasons we're proponents of Bill.com, and it's not the only software doing this, is just one of the leaders in the space. is that it allows for a lot of controls over the spending process. And I think that the control aspect also speaks to sort of the overall financial leadership of the organization, because what controls you have in place, who's approved for purchases, it really goes back to, is your spending aligned with the organization goals? And so sometimes, it can seem like an unimportant decision whether somebody's allowed to make a $2 purchase or not, but it speaks to the kind of culture of the organization, and how the organization is being led, and aligning their goals with your spending. And so what I like about, Bill.com has both the payable side, where you have invoice approvals and you can have multiple people approving something, which is helpful from just making sure that there's not fraud or waste going on. But it also has the credit card side, where you can give people specific spending categories that are sort of pre-approved, and say you can purchase up to this amount, but also you can give cards that say you can only purchase from this vendor, or you can only purchase this category of expense. And so it allows you to set some of those priorities up front, that I think, to our conversation today, I think speaks to sort of some of the engagement or leadership of the organization, and how you align your finances with your organization priorities.
Yeah. And that's bill.com, bill.com. I know someone
Mm-hmm.
was asking. We got another good question from the folks watching here. What have you seen succeed when getting executive directors to switch focus to more strategic thinking versus more operational day-to-day topics? Are there mental frameworks that you find useful? Such a good one. So those executive directors, we got to get them to focus strategic thinking versus that operational day-to-day. How do you help get folks there?
I'll say one thing real quick, then kick it to Daniel. But I was at the direct day that what they had said is over the last few years, they felt they were more involved in the minutia of the accounting more than what they should have been. And they've been working hard for close to 2 decades now, but they have deep trust in the community. They have relationships. They've been in relationships with the local foundations, community foundations, all these things. They've done a good job of understanding and communicating the data of the work that they're doing. But now they're trying to really dial in their processes, HR, onboarding, and to really kind of dial in these things for more staff and for more growth, because they feel like the world needs what they're doing. They have credibility in the market, but their time has been spread so thin on being on so much of the stuff. And I think some of it had to do with the lack of confidence, maybe, and how stuff was being done at certain times. And so now what's really their most important priority this year, or one of them, is to really dial in how things functioning in this space in HR and operations, so then they can really go capitalize on the trust and relationships and the credibility that they have in the market that they're in, to really go impact more people. And so I think obviously you've seen this where sometimes maybe there's a co-director or maybe like a COO, and things are dialed in tight, but a lot of times you see directors that are just wearing a ton of hats. And so I think ultimately, I think maybe Daniel could speak more to how that happens or what that looks like. But people, I think really good leaders, they want to feel that they can trust the processes and how things are going, and then put the foundation in place to professionalize the organization to then go to really then go grow. What else, Daniel, to that did I not share that, or maybe taking a totally different direction? But what do you see like for how things can be just really working well?
Um, I guess one thing that comes to mind, and again, with coming at it from the financial perspective, um, I would just say, you know, a lot of people have a negative connotation associated with the word budget. And when you have a budget, people think of it as like handcuffs, that it's restricting you from doing things, from spending or something. But I think using like a budget process to set strategic priorities for the organization can be very like helpful, because the budget is not supposed to be like handcuffs to keep you from from doing something, it's supposed to be some guardrails to keep you pointed in the right direction. And so just setting those priorities and say, okay, you know, this program is important to us. What is it going to take to accomplish this program? And are we stewarding the donor dollars in a way that allows us to accomplish our mission? And so then using budget to actual or reviews, a lot of times, you know, things don't play out exactly how you expect them to play out. And so it's okay if there's differences in the budget to actual, but you need to be able to explain why there's differences, what happened, and keep an eye on major issues to say, oh, well, we got a specific grant in that was funding for a specific area, and so we intentionally spent more in that area because we had designated funding for that area. That's why there's a difference, or but having that, or using finances more strategically on that front, instead of the budget being like, oh no, I've got to explain to my board like why we're over budget here. It's not about slapping somebody's wrist. It's about like, is the organization accomplishing the objectives we want? Are we putting the resources in the right areas, to reach our goals, basically?
Yeah. Well said. And I always think with the framework, what I always want more financial professionals to do, particularly if you're trying to get that executive director there with you, is the more mission-minded language you can put around finances, the better. So, and Daniel, you essentially said that too, but it's even, okay, it's a budget. We can't launch that new program. So an executive director is saying, we have a need, we have money, we can solve that need. Why are we not doing it? The budget's restricting me. Another framework would be like, we want you to solve that need. We need to solve that need. But what if we do that, we launch the program and we can't sustain it? And then all of a sudden we're in the community and out of the community. We helped, but did we end up doing more harm than good by not planning and being making sure the program was sustainable first? So it's almost like let's pause, let's make sure we take a step back and have that mission and the beauty of the impact that we can have and then plan for it and then go do it. And I think that's the balance of that financial side and that mission-minded side. And just like we were talking about reserves, like, hey, that's just not money in the bank. That's like a responsible stewardship of the organization to have an emergency, savings account over there. So that language, I think, is the framework where the more you can draw your finances to the mission and continue that through point that it's about sustainability, it's about the health of the organization, it's about ensuring that you can provide continuity to the programs and the people you're serving. That's what's most important. And finances is the way you get there. And healthy finances is the way you sustain it. Um,
Yeah, one thought, one here, I'll just observing and listening, you know, the pandemic, there was a sharp adjustment, I think last year, maybe a little bit before last year because of the pandemic. And just what I've heard, meetings I've been on, where I definitely know of situations where if people really had the budgeting process locked in and they had the budget to actual, uh, very clear, and then certain programs and how they were being funded were clear, they could have made a hard decision before it had to be a very hard decision.
mhm.
And I think ultimately there was a lag time, and I think that lag time is because sometimes can be because of information, and it's very tough. So I don't mean like what I'm not trying to say is minimize the pain or the adversity that I think nonprofits have gone through, because there's obviously been a lot of great people doing a lot of great work that have really had their funds adjusted. But I also know of certain examples where if people had these processes locked in and the directors had the information, the board, they could have made decisions much sooner that I think would have been it'd have been better for the people and for the organization.
Yes. I know we're coming up on time here, but there are a few more questions that people can keep sending in. Maybe we can kind of do this one and then one more and we'll close out. But it's How can an organization determine if their model is financially sustainable? And they said it's kind of like a crawl, walk, run with reserves, but how would you guys define that? Daniel, do you want to start? How would you determine if the model is financially sustainable?
Um, I think just going back to my earlier comment about the difference between like what cash is in the bank versus whether things are actually working or not, I think that's where um, sometimes, you know, cash in the bank, and you know this from working with organizations on their reserves, like reserves fluctuate throughout the year. You know, when you finish December, your cash reserves should be higher because that's traditionally when most places have a lot of year-end giving. And so just because you have cash in the bank today doesn't necessarily mean that everything's good and that things are working. And so you have to have both the um, sort of the accounting level like financials that show that kind of match up your revenues and your expenses with the time period that they're happening instead of like looking just at the cash flow side. But you have to have really both in tandem because you can have a model that's working, but if you're depending on reimbursements from government grants and those are delayed and you might not have cash in the bank even though your model is working. And so I think just learning sort of the interaction between those and whether what sort of accountants are looking at on matching up the revenues and expenses. Are we covering our cost here, as well as looking at the cash side and seeing, do we actually have money in the bank? Do we have reserves for for the future? So I guess that's how I would answer it, is just making sure you understand both the cash side of flows and the kind of more traditional bookkeeping, accounting, financial statements, whether your expenses are covered.
Yeah,
Is
I
there anything
actually,
worth?
Go ahead, Sam.
Sorry, I was just going to say classes. Sometimes people don't know about certain programs, Daniel, about really because you got to understand where your cost centers are essentially. And is there anything about setting up classes? Because a lot of times people's their information's all just kind of meshed together versus having really good classes to understand that from a program side. Is there anything worth sharing there?
Yeah, I mean, what QuickBooks calls like classes are sort of what some people might think of as departments, or some people might use it for tracking specific grant funding. I think, you know, especially when you have multiple programs or you have multiple like restricted grants that are coming in for specific purposes, you do have to track those areas sort of separately so you can see whether you're subsidizing, a program with general unrestricted donations, or whether it's being covered, specifically with designated dollars. And so, as the organization grows, as you get complexity and multiple programs and multiple things you're trying to do at the same time, it can be very helpful to just use some of those tools, whether it's class tracking or in QuickBooks or something else, but you can use some of those tools to track the income and expenses for that department or for that program or for that grant, and make sure that uh, again that you're aligning your objectives with where you want to be spending your resources. And there's certainly some programs that uh, may require ongoing, support from just your undesignated donations. And as long as that's an intentional decision and you're aware that that's happening, you know, that's fine. But sometimes if you agree to take a designated donation, or you agree to do a grant program, and you don't realize that grant is not fully covering the program, and that you're essentially signing up to subsidize those costs out of the rest of the organization's budget, you can run into problems.
Yeah, great points. And I know on our end, when we think about how do we know if an organization is financially sustainable at Infinite Giving, we go at a high level where we're like, are you operating out of a scarcity mindset? It's okay if you are. A lot of nonprofits are. right? But that means where's the money coming next month? Can you make payroll? Do you have enough cash in the bank beyond like 3 months? Right? That's not sustainable. You're in that scarcity mindset. It means you're tired. You may not be sleeping at night, right? It's how do we keep the lights on? How do we keep the work going? You have to move out of that scarcity mindset. And what we say, I actually have a book. It's called Funding Your Mission. You can get it on Amazon, and it's a financial framework for growing nonprofits. And we talk a lot about that first big milestone being a healthy reserve fund. And that is outside of your operating cash flow. Even if you have rolling, right, as Daniel was mentioning, hey, you're going to have more money in the bank in December. But if that is like your operating cash flow, we don't consider that reserves. It's like anything beyond like that 12-month operational budget that you can put aside and say, hey, just like we do for our family, this is an emergency savings account. That's when you're starting to get into that like sustainability side where we can say, oh, we have 3 months of operational expenses set aside. Get it out of that checking account. Honestly, put it with Infinite Giving or put it somewhere where you're going to steward it well. Pre-COVID, you would hear 3 to 6 months of operational reserves would be very common. Today, 6 to 12 months is very common. There are a lot of right paths, right? There's a lot of right ways and a lot of mix in between those. But a good rule of thumb is at least 6 months of operational reserves, which is outside of your OCF, your operating cash flow, put aside in a healthy savings account, reserve account, fixed income, something where it can grow and focus on capital preservation and keep up with inflation. If you've achieved that, that's a big moment where you're like, all right, let's get into strategy. And then you can start planning about new programs and more growth-oriented accounts. But I think sometimes we think about the bank or we think about big investments. But the reality is to be sustainable, there's a big in between where it's like, let's talk about how we're stewarding our funds. Let's talk about if we have a healthy reserve fund, how much is enough, how much is too much. And that would be a good kind of rule of thumb. Well, these are so good, and I know some questions are still coming in, but we are at time. Daniel and Sam, super quick, like quick answers. Final question. What's one thing a nonprofit leader can start doing this quarter to strengthen their organization's financial leadership? What would you say?
Daniel,
I
I'll
think
let Sam's just like, Daniel, you got this. Daniel, give us something good. What you got?
I'd say go
well
on vacation, recharge.
We accept.
I'm joking.
yeah, just make sure you're reviewing your both your cash and your financial reports. I know that sounds basic, but uh, I I've seen enough across the nonprofit industry now to know sometimes that doesn't happen. So just making sure the leaders are engaged enough to review your finances and where things are, and I, I think that's the place to start.
Yeah, to
And
review it, understand it, and at least ask the questions of the story and the framework around it. Why is that there? Great. Do we need purpose behind that? I think it's great. Connecting the
and
mission to the money.
yeah, and one of the comments that I had highlighted in your book, Karen, was just says donors are more likely to consistently give to organizations that demonstrate financial health, transparency, and long-term strategy. And I think sometimes nonprofits get in the cycle of
There's a
that
plug.
scarcity mindset that you already mentioned, where you're doing emergency appeals or you're doing last minute, like, oh, we're in trouble, we need your help. And I think you might you might survive another day that way, but it's not sustainable, as you've already said. And I think donors appreciate when they can see that thoughtfulness and that long-term health and strength of the organization.
Yeah.
And you know, I think it's a cycle that tends to build on itself when people see that financial health. And then I've seen nonprofits that are able to get estate gifts and things like that that come in, and you can start setting aside some of those funds, and it just people know that the need is there, that it's going to be there, that they believe in the organization, and then that gives them more confidence in making some of those decisions that might result in a really impactful gift.
Donors don't want to save sinking ships, right? They want to be behind a mission and involved in a story where they are generous givers and they're giving into an organization that's sustainable and making impact. So we can't be scared of telling that story of our finances. And yes, you may get, a one or two squeaky wheels about that, but the reality is a lot of the data supports these healthy organizations are who get those major gifts. So sustainability is great for you, for your peace of mind. It's great for your donors, so for their measurable impact. And it's great for the people you serve so that they know that you're gonna show up day after day. Thank you, Sam and Daniel, for your candid insights and your time. We appreciate you guys. If you all want to further connect with Sam or Daniel, you can find them at cfoleverage.com. Expert, affordable, nonprofit accounting services. We refer folks to them. You can also connect with us at the Infinite Giving team. We're supporting hundreds of nonprofits with those strategic cash management, investment services, and really those frameworks. So we hope this conversation helps you guys all lead with greater confidence in 2026 and beyond. And we appreciate you joining us. Have a great rest of the day.
Thank you, Karen. You're the best.
Thanks, guys.